Here's a head scratcher. What the heck has happened to oil and to natural gas? The price of crude has fallen below $40 a barrel really bad today. Natural gas, despite a tremendous cold wave of the country, $5.54 per 1,000 cubic feet. I know. It's hard to figure, isn't it? It's just hovering above its 52-week low, even though we're having a cold winter. Whenever this happens, everybody becomes convinced that the recession will be endless, that there's no demand for fuel. I'm not buying that theory, not one bit. I don't think the world away from the U.S. and Europe is as weak as people think. Or I think it could turn faster, and I don't think the demand is as low as people believe. Plus, there just isn't a lot of new supply coming on. That's why I want to take a look at Anadarko, APC, which you know, if you watch the show, even on a momentary basis, is my favorite natural gas company. I probably reiterated it 3 times last week. Anadarko hasn't cut its capital expenditure budget by nearly as much as its peers. It's looking to decrease CapEx by 15% in 2009 compared to 30% for the rest of the industry. It's not cutting back its drilling activity either. Instead, Anadarko is looking to increase rig efficiency and cut service costs by 15 to 20% to maintain its drilling levels. That means gross margins could go up. Now, thanks to the sale of its interest in an offshore field in Brazil for $1.4 billion, Anadarko doesn't have to worry about liquidity. Remember, that's what plagued Chesapeake, which was one of our favorites at one time. This company, Anadarko, has about $1 billion in cash with a $1.3 billion credit facility. No more debt maturities till 2011. That's the kind of company that's going to get through this morass. Plus, Anadarko is still exploring. How about this? Working on a find in Ghana called Jubilee, where the company just today announced a successful test well that's producing nearly 17,000 barrels of oil a day. This is the first new find I have heard in a long time from anybody, not just from Anadarko. Jubilee could have between 0.5 to 1.8 billion barrels of oil equivalent in reserves. Right now, they're drilling appraisal wells followed by test wells, which should lead to a resource update sometime in the first quarter. Jubilee should be up and running by 2010. That is remarkably fast. Remember, it's 2009. Wake up. Anadarko has 2 more projects that should be up and running in 2011 2012, along with some prospects in the Rocky Mountains that are profitable even at $5 natural gas and $30 oil. We're there for 5, but 30 oil still away. So, is this a good time to buy? It's down 43% from its 43 points, not percent, 43 points from its high. Up just 14 points from its low. The last time we spoke to Jim Hackett, Anadarko's great CEO, was back on November 17th. He told us that with the stock price where it was, which was almost exactly where it closed today, Anadarko was effectively buying reserves in the ground at a cost of $10 a barrel whenever it bought back stock. And the company has a $5 billion repurchase authorization. I want to know if Hackett took advantage of these prices to buy more stock since the last time we saw him. And I want to know, what's the prospects? What does it look like? And is it ever going to go back up? Natural gas, that is. So let's hear from Anadarko's CEO and a good friend of the show, Jim Hackett. Jim Hackett, welcome back to Mad Money. How are you?
Jim, appreciate it. Doing fine.
Good to see you.
Good to see you.
How did we get in a perfect storm where natural gas doesn't even go up anymore, even though there's a frigid cold wave throughout most of the country?
Yes, it seems odd to us because there is such good weather pattern for us, but the success we've had in onshore drilling has basically overcome all of the other factors that we would normally think would drive towards higher natural gas prices. But you've seen, as you said, all these cutbacks in capital, tremendous drop in rig rates or utilization. And because of that, you're going to start to see that growth rate slow. That will tend to start bringing prices back up, and that will tend to make all of these equities, I think, a better buy over time.
What was natural gas doing at $13 a year ago?
Well, any market, as you and I both know, can be overbought or oversold. I think it was overbought relative to the fundamentals for sure. What we probably are seeing today is an oversold market. Right. But we do have some, we've got reasonably healthy inventories. We've got a lot of onshore production. People are trying to make their best guesses. And with the economy faltering, of course, we're all trying to see when does that bottom out. But I think given any kind of normalized economic environment, with the rig rates dropping, we're going to see natural gas recover. And it's a great fuel for the future.
Absolutely. Now, one of the things that I saw Chevron report last week, it looks like they didn't sell forward anything. They didn't take advantage of these big spikes, $140 oil, $13 natural gas. Have you been able to use the futures markets to be able to really lock in a better price than what you can get in the actual market?
We have. In fact, we have some hedges still in place for a good portion of our production for the year 2009 that we set in motion actually in the year 2007 towards the end of that year. They were out of the money at $13.
Right.
Looked bad at that time.
Yeah.
We had big mark-to-market losses. Now that's all reversed. In addition, we hedged a bunch of our production in the Rockies, which was very, I think, forward-thinking in the sense of where those basis risks have gone in the spreads. But I think those that were able to take advantage of that higher price environment are now enjoying it, and we're going to be in that position.
And you're one
in
of them, right? You're one of them, which is one of the reasons why I'm not worried about your balance sheet. Talk to me about your balance sheet. You have really made it pretty good, even though you're still drilling all over the world.
Great shape. We are, and we have big capital requirements. We needed a strong balance sheet for that. That's why we sold all those properties post the acquisitions we did in 2006. So we're in great shape for this coming year. Challenges are in the cash flow side. That's why a lot of people are cutting back capital. We want to make sure that we're prudent with regard to capital, but we also want to continue to exploit this tremendous inventory of exploration prospects that we have really discovered over the last 3 or 4 years and made preparations for in the last 5 years, one of which is Ghana. Another one is stuff in the Gulf of Mexico deep water where we've had several discoveries. Down in Brazil where we've had a discovery. So we're very eager to see where all of this heads for the company.
Well, using that $10 a barrel equivalent that you mentioned on the show in November, and I read in today's Wall Street Journal that Exxon is looking to make some acquisitions. I know you've got great properties all over the world. Do you read an article like that journal article and say, oh shoot, man, our stock is Exxon's going to knock on our door?
Well, you always worry about that when you know you've got a model that really works, that somebody will take the value that's inherent in that business and only give you a portion of that when your shareholders deserve a much bigger portion. But as a public company, we've got to be receptive to that. Without naming names on either side, whether it's Anadarko or Exxon, I think there will be consolidation activity. It certainly makes sense to me that that would occur in this environment. But there is still a pretty big bid, offer spread, and we'll just have to see where that all ends up going.
Papers are filled with articles about how the auto companies are focused on electric batteries. Without exception, every one of these sounds pie in the sky. To me as someone who is reading them and saying, well, yeah, I'd love to have a battery-operated car, but Ford's making 10,000 maybe in the out years. What happened to the movement to use our clean fuel that is in abundance, natural gas, in cars? It seems like that it just disappeared, the movement.
Well, I don't think it's going to. It may have disappeared, and I don't disagree with you that people aren't putting as much emphasis on it, especially with the economic downturn. But under the Obama administration, we're pretty confident they're going to want natural gas in a big way because they can't see their way to nuclear with regard to the disposal issues, even though I think nuclear ought to be pushed in this country. They don't want big coal. Whether or not that makes sense, they don't. And so the only bridging fuel they've got is natural gas, whether it's in natural gas-fired vehicles, which is something we've got a real long-term technology play in, or electric vehicles in the sense that all the incremental natural gas demand that's going to be created by electricity generation will be put towards electric cars. So either if you fuel the car directly with natural gas or you fuel it through the electric grid, it's still going to need natural gas.
Jim, one of the things that mystifies me is we have seen tremendous declines in a lot of stocks in the group. You've got the right capital structure. You actually still have a currency. Your stock has not been crushed as much as others. Why aren't you on the phone buying up some of these guys with the great prospects that can't afford to fund them?
Well, because our value inherent in our stock is actually a better buy. Buying back our own shares, plus executing upon the tremendous opportunities we've got internally in the company, it's hard to find anything that's accretive from the standpoint of what we've got organically already. It doesn't mean some can't exist out there, but we kind of want to save our balance sheet for either buying our own stock or executing our own capital.
Are you in? Are you in the market buying?
We were through the course of 2008, but now because of the cash flow projections for this coming year, we're just being patient with regard to that because we want to fund fully the capital program. Once we get beyond that full funding of the capital program, we'd be right back in the market buying shares.
All right, so we do not need to see, we will not see an equity offering most likely in 2009, 2010. We don't even see the bond offering, right?
Right. We do have some bonds coming due in 2009, but we've got a facility to keep rolling that if we decide to keep it that way.
And can you
and I both know historic spreads. We don't like where they're at today.
Because I don't want to see you like El Paso having to borrow at 13%.
Well, we're not going to do that because we're investment grade, so it's not a high yield stock.
Very good. Jim Hackett, thank you so much for being really the beacon in the group, and I'm glad we stuck with you because you're sticking with your shareholders. Jim Hackett, Chairman, President, and CEO of Anadarko Petroleum. Thank you so much, sir. Happy New Year to you.
Same to you.
Excellent.
Thank you very much.